Hey guys, it's Will. Hopefully you're having a great day today. APLD is one of the top talked about data center companies that has been growing pretty significantly in this year, and we're going to jump into it in an analysis today. So when we're analyzing a stock, there's three steps we go through. The first step is going to be getting an idea of the market in general direction. We're looking at APLD over the last year. They've made a serious bull run up into $40 a share because the data center market has been seeing so much growth this year. The data center market is expected to grow to over $1 trillion, according to AMD CEO Lisa Su. And if you're looking at the government spending, it's been increasing big time this year. You can also look at the tech spending. If you look at tech, they say that the projected outlook for 2025 alone was $580 billion in data centers. But that's not including some of the deals we got signed earlier this year where they're not even taking into account that Apple plans to spend around $500 billion on AI. And there was a big AI bill that got passed, I think, what was it called? Stargate with the US government. That was another $500 billion towards AI. And then you got, just in general, AWS, Google, Microsoft, and Apple investing more, including Elon in one of the top focuses for not just cars, but actual data center infrastructure, semiconductors even, so that they can power, Optimus and be able to power xAI, which is one of Elon's companies. So there's two factors we consider when looking at the market. The first is going to be that there is real world usage. And when it comes to the real world usage of APLD, you can see that they have been building data centers for companies that are in the AI sector. So we're talking about engineering these data centers with the best different energy sources, from wind turbines to solar to hydroelectric. And they're working with companies here like Nvidia and Supermicro Computer in order to make the data centers functional for top partners. They also have some other companies they're working with. So when it comes to the focus of Applied Digital, they're more in the construction side, and they have some partners with companies like Coreweave, where they've signed over $15 billion over the last 6 months in building data centers. So here's a $7 billion deal, which was later ramped up to an $11 billion deal. So the first thing is the real world usage. Once we have the real world usage dialed in, the next thing is to understand the financials. And the financials indicate that in that market, there's more spending happening. Now, the reason we start with the real world usage first is because there's a lot of markets in the world where you might see a lot of money going in. For example, like quantum computing, where, yeah, the money is there, the excitement is there, but is there, actual real world usage in quantum? Yeah, there is some. In fact, we've even recently integrated it into our app where you could pull up analysis from a company and start using it that way. But ultimately, when we're talking about the real world usage, that validates that that's not just blind spending, but it's really being used. And so with Applied Digital, not only is there real world usage, but there's also some cash flow starting to increase. You see the contract sizes being very big, and really the revenue hasn't caught up. $64 million in revenue last quarter with that 84% year over year change is good. If you look at the annual revenues, they seem to be increasing. In 2025, if they're already around 100 million, they did about 144 million in 2024. So if they're on track right now to already do over 200 million, their revenue is growing. When you look at the assets, this is really key. A lot of people miss this about stocks and any companies that they're investing in or any deals, is you want to look at liabilities and you want to look at the assets, because the liabilities tell you the story. This company is keeping pretty low debt. Their assets jumped in the last quarter up to 2.4 billion, while their total liabilities are holding at 1.29 billion. So assets growing more than their liabilities, and they have a pretty good equity line there of over $1 billion. Now their market cap's at 6.59 billion. So they're starting to price in for these $15 billion deals they've signed recently with Coreweave and others. And so when we're looking at the what that means for the company, we can actually pull that up. Let's go ahead and pull up APLD. Let's get an analysis running. And actually, also, this is the second piece of looking at real world usage or the financials. we kind of get into the analysis stage. And the analysis stage is looking at the financials, the news, and the charts. And so in the second stage of looking at the analysis, you want to look at the financials, which we just kind of went over. And again, they look pretty favorable. The only thing that's obviously a little bit concerning on the quarter and things like that is that they haven't seen that, billion-dollar deal type of revenues roll in after signing those contracts. And you just want to see that hit the balance sheet. It's almost feeling guaranteed, but it's still a little speculative until you really see it hit the income statement. And so we haven't seen that. So net income still a little bit negative, which is a little bit concerning. You'd like to see a data center company to operate at a profit, obviously, rather than the net income being negative. But when you're looking at the balance sheet, you're seeing how the trend is and how they're growing over the last year. I would anticipate that they're going to clean that up even more and that we're going to see them as a top data center play. So they are partnered with companies like, Nvidia and Supermicro. So when you're looking at those partnerships, then you get into the news, right? The news, again, they got the $15 billion deal here, or $7 billion plus $11 billion plus another $4 billion with another deal. And they continue to kind of innovate for these hyperscalers. And they also are doing the senior notes, secured senior notes here, $2.35 billion. You're probably going to see that balance sheet jump up in the next quarter as a result of some of their offerings too. And so when you're looking at the investments in the company from a news perspective, the news looks fairly good. They're building in a place that's cold in their data centers. So that means that they're at an advantage because ultimately cold places like North Dakota means cheaper operations because you don't have to worry about cooling it down, let's say in the summer as much, or in the winter, it's already freezing cold outside. So they spend less on the actual cooling. And then they're also in a sustainable area of wind power. And they're also building it in a place where it's pretty cheap to run that power, pretty cheap to be there because North Dakota, to be frank, and I love all of our North Dakota people. In fact, I've had some people on the channel that say, "Hey, Will, did you notice that North Dakota is, having some more data centers, or they live in the towns?" And they're saying, "Hey, this one just went operational." So I love that feedback. But there's not a whole lot going on in North Dakota. So it's a pretty cheap place to live relative to the rest of the United States, which ultimately, kind of puts it as a good candidate for them to build that infrastructure. Hopefully, my gut says that the integrity of the data centers in the way that they build them won't negatively impact the community. And I would anticipate that how they're building them and the way that they're doing it with liquid cooling and things like that, they won't be super loud. And that if anything, they'll bring some more tax dollars into the North Dakota place, and they'll actually supercharge some of the economies out there. So I would imagine that's going to be actually hopefully positive towards the North Dakotans out there. North Dakotians? I'm not really sure. I should probably know that given that my brother's name is Dakota. But hey, that's what you got. So you get into the news, it looks pretty good. You get into the financials. This is where we're looking at, or you get into the actual charts, right? So we go from the financials and the charts. The projections are next. But when we're looking at the insider selling and the institutional buying and selling, it's been kind of mixed. You actually have a little more sells recently than buys. You have BlackRock selling some recently, but Nvidia is investing in the company. And then on the insider side, you could see some buys, some sells here, but what does Grok have to say? It looks like a little bit more sells than buys. So again, kind of seeing a little more of an insider and institutional kind of towards the sell-offs recently, just recently. And you see some sell-offs kind of kick in, but that's what we've seen in most of the markets. You do see this sell-off here. And I think let's get into the projections here. So the projections, according to the machine and Grok, which is what we have selected, indicate that over the next month, it's looking bullish, holding above the $24 range. And then over the next year, they're expecting the stock to be gaining about 15% per year annually over the next year. Now, if we're just looking at the next week or so, still a little bit negative over the next week. Into the next month looks positive. It says that there could be a false breakout happening, meaning, that we could start to see them maybe recover, and we'll kind of get into what that looks like. But it says that it says that the resistance around 24.50, if it holds firm, that's what's going to happen. But if we see a breakout around 24.50, that's good. If it can hold and not have that rejection there, then we're looking pretty bullish into the next few months and the next few years. And so that's according to Grok. If we take a look, let's kind of check that out, see how it looks here. I've been using the machine a lot. The last drawings we kind of did with this company, we saw APLD making a run up into about $25 a share, and then they slowed back down to this $20 support. And that's where we recently saw them bounce here on Friday before recovering about 25% here in just one day. So they did bounce that support level. Now, last time they pulled down to that support level and bounced, we saw them rally here. What was, about 85% rally or more, almost 90% rally to $40 a share. Now, the overall trend, I'm not saying that's exactly what's happening, but the overall trend here kind of indicates that's a key level of support, and that response yesterday is either, again, kind of what we talked about here, that 24.50 level is key for them to see if they hold and break above this level. Because as you can see, that EMA kind of acting as a resistance. So Grok, or the analysis we were running on the machine when we gave it all the real-time data, it's basically saying on the technical side, that you have this EMA that it's holding below. A lot of times, if it's bearish, it's going to be holding below that EMA. We see that here. And it's struggling to break back above, but it's almost breaking back above this 24.50. If we see it break up above this 24.50 level, that was a previous resistance right here. And then we're starting to look like, okay, maybe we start to break back out. And when it's bullish, you're going to see it holding above that EMA, holding above that moving average, and we'll start to see that trend kick in. But for now, they're just kind of struggling to break out of the trend. You see them kind of holding below, and now we're watching this 24.50 closely, as while we'd like to see this recovery, obviously, and see them get back up in these $30 to $50 levels, which I believe in the long term we could see, that's a 50% increase. That's really great. But in the short term, if they can't hold that level, you're looking at next support, conservative sell down, something like this, if it really were to get beat down into that $21, $22 range. Now, we'll see how it reacts at market open. We're in a position on APLD. We're up about 66% right now since entry, but we started covering them around $3 a share here. And when you're looking at this company now, again, we want to wait a little bit more for confirmation. When the market sold off, it didn't look so good. Then you see them start to recover, and I'm just going to see how they hold. If the opportunity presents itself at, let's say, market open tomorrow, see it hold that $24.50 level, then we're starting to see, oh, maybe we're seeing a recovery here up into this range at least of $27. That's a 12% short-term trade potential to maybe do alongside the longer term holdings. So we'll be watching, see how the market reacts here on Monday after a nice bounce. And if you guys want to tune on into our live sessions, we have Monday through Friday in StockMate. It's going to be the second link down below. Get a community of investors. We got some targets coming out later today for the week, different companies reporting earnings. We got 28 millionaires in StockMate. If you want to surround yourself with other investors, send me a message if you need to. There's learning for AI, quantum, space tech, data center, stocks like that you can learn how to invest in this market in StockMate. And I would love to have you there. In fact, if you join our live session tomorrow morning at market open and you jump into StockMate in the second link below, you get a free t-shirt when you join as well, free StockMate tee. So appreciate you all. I hope you have a great day. In fact, we just gave out a free t-shirt to our team as we had them over here at our place while we're visiting in Buenos Aires from California, and we got to give out some StockMate t-shirts to our team of people that do work here in Argentina, so that was very nice. But anyway, you get a free t-shirt as a bonus when you get into StockMate. I would love to send it over to you, and see you at market open tomorrow morning. If I earned your thumbs up, hit the like button. Do consider subscribing, and I'll see you in the next video. Take care.